Good afternoon. Welcome to the January 13th, 2026 meeting of the Hingham Municipal Lighting Board. This meeting is being held remotely or in person as an alternate means of public access pursuant to Chapter 2 of the Acts of 2025 and all other applicable laws temporarily amending certain provisions of the open meeting law. You're hereby advised that this meeting and all communications during this meeting may be recorded by the town of Hingham in accordance with the open meeting law. If any participant wishes to record this meeting, please notify the chair at the start of the meeting in accordance with Mass General Law, Chapter 30A, Section 20F, so that the chair may inform all other participants of said recording. Is there anyone else here today who would like to record the meeting? I don't see anybody, so we will move on to the first item on the agenda. And to help us discuss this today, we have with us Deirdre Lawrence, who is our attorney for the light plant. And what I'd like to do is just give a little background to this discussion because it's on the agenda at my request. And this is not so much a discussion, it's on the agenda as PCA/energy charge discussion, but it's really more of a very basic question that I had that I hope Deirdre could help us clarify, which is when we say, which we do say, that the role of the light board is to set the rates, what exactly does it mean to set the rates? And here's what's behind that. When we had the discussion, I think 2 months ago, about the fact that we would be lowering the energy charge to make sure that we were compliant with the state requirement that we not have retained earnings higher than 8% of our capital plant. And that Joan had put that into place, I said, wait, isn't that a rate? And why are we not taking a vote on that? And we had occasion to consult Deirdre. I think Tom asked, and the answer was that what we do is we don't vote on numbers. We set a procedure or a formula which determines what the rate is to be. And so what confused me about that is specifically, since we are coming up on having a new rate study, I recall that at the end of our previous rate study, we actually voted on numbers. That was what was presented to us as, here are the rates that we recommend, the rate study consultants said, and will the board approve these rates? And we did. So I don't remember ever approving a rate that actually consists of a formula. The last time we set rates, it was actual, it was percentage increases, I think, was what we voted on. Maybe it wasn't actual numbers, but percentage increases. So I was hoping to get some clarification about what exactly we should be voting on when we are setting rates. So I just invite Deirdre to join us, and maybe you have some thoughts that will clarify that for us.
So if I can backtrack a little, I can give you some background on what a power cost adjustment charge is viewed as, given the statutes that govern your operations. And there's actually been a court decision on what a PCA is, as well as, even though they don't regulate you, the department has had, Department of Public Utilities has had an opportunity to discuss them as well in the context of I believe it was a rate discrimination claim that was made years and years ago against, there was one particular case involving Wellesley. So it's another light department. So I think we have enough info, as you know, Laura, there's significantly, noticeably a lack of often useful precedent on the nitty gritty of this stuff with municipal light plants and rate making. But this area, we actually have something to go on instead of always saying, we think the department would look at it this way or that way. So the PCA itself is not considered a rate. Charges for electricity or gas cannot be changed more often by law than once every 3 months. There's a prohibition in the statute on that. And I believe it was probably in the 70s with the first sort of energy crisis that um, light plants were running into shorts on a monthly basis and didn't have the kind of cash reserves we see today. And so they came up with the idea of a cost adjustment charge, which would simply be a straight flow through. And it is calculated pursuant to a formula. I don't know how Hingham does it, but for example, I know that, and I'm just using them. I have another light plant in Metro West that they have three specific FERC accounts that are looked at when they calculate their PCA. So I think they use like a generation account number, transmission account number, and that may be it. I don't want to misspeak, but that's basically what what goes into the PCA. And so you're not asked to vote on PCA charges because it's considered a formulaic flow through. And the state's highest court has said that they don't consider and therefore you can change it every month. So it allows a utility to act very quickly to stave off any kind of shortfall in the cash flow in the event that they experience fluctuations in those kinds of accounts. Now, that being said, I'll be honest with you. I do know I believe in the Wellesley case, the Department of Public Utilities looked at this claim that the petitioner said, hey, these guys raised our rates and they didn't follow the statute and they didn't have the right to do that. And the DPU said, we don't have jurisdiction over this, period, to begin with. It's the job of Wellesley and its board still to deal with rate issues. So
Was that relative specifically to a PCA?
that was relative to a complaint about the general rates, but one of the
Oh,
allegations the petitioners made was they're misusing the PCA. So, and they were like, we don't want to look at it at any of this. Because we just don't have the jurisdiction to do so. Now, that was, what's that worth? What's I think more significant is that the Supreme Judicial Court, this is years and years ago, a ratepayer in Peabody complained that they were not going through the publication process, in the newspaper, they were changing the power cost adjustment charge every month, and therefore they were violating the statute on rates as applicable to light plans. And the state's highest court said it's not a rate, it's a mathematical formula. And what changes is not how it's determined, because the same factors always go into it. It's like a simple division. Joan can probably speak to how they come up with the number, but that's what the court said. So technically, this is not, when you have an agreed upon formula in place. Now, if you were to discuss or consider, well, we want to be able to maybe, and I'm just, this is just an example. We want to add another account to what we pass through, what we consider to be part of our power supply costs. There's nothing on that. So in that event, to be super, super, super conservative, I would say, if you're going to change the components of how the PCA is, the account numbers that go into the PCA, or the thing that divides, that you divide it by, that to me, you're changing a charge. You're changing a rate or a charge for electricity. But to the extent that using the same, X plus Y over Z that you've always used, then that's not a rate. And that's why it doesn't have to be you don't have to give advance notice. You don't have to hold a hearing. You don't have to, well, you don't really anyway, but you don't have to have any kind of board action on that. It's a self-setting mechanism.
So thanks for that. That had a lot of information in it that I was not aware of. So that's really helpful to me. I wasn't actually asking though about the PCA in particular. The last change that we made was not to the PCA, but instead to the energy charge that is part of the residential rate and the commercial rate. And my question was, well, is that changing a rate?
What goes into the energy calculation of the energy charge?
I'll
Like
have to
what is
ask
that?
Joan for,
Well, that's important because
it's the
some people,
cost of our energy. It
that's
reflects
a power cost
what
adjustment. That's a PCA by any other name.
a
Some
PCA
people
by
call
any
them.
other name.
Yes, I think, I've run into that too, is that different systems call them different things. If it's functioning as a power cost adjustment charge, meaning that the straight pass through of the fluctuation, then that can be done outside the normal rate changing procedures. And I can see how we're getting into the weeds when, you have um, the issue of you voted on a percentage increase previously. So
Yeah.
so I understand that, but those are the actual rates determined pursuant to a rate study. And to me, those are rate schedules and they're part of the tariffs. And when you go to change a tariff, which you don't do when you simply either reduce or increase a power cost flow through charge, whatever you want to call it. When you go to change your general rate schedules, you'll say you have a residential R1 rate. Okay. I don't know what Hingham has, but says there's probably, I hope, a paragraph somewhere that says, this rate is subject to uh, energy charge or a PCA charge. Okay. You'll see that in a lot of municipal light plant systems. So when you're changing the residential rates, those have absolutely got to go through the regular board process. But
Right.
the little energy charge that forms part of a residential customer's bill, if it is a pass-through, if it operates as a pass-through, then that's, like I said, a PCA by any other name, and that doesn't necessarily require a board vote.
So
Now,
it seems like if the description of the residential rate said this includes an energy charge, which is a direct pass through, then
yeah,
that would cover you because you've said that's part of
correct.
the formula for the residential rate.
Right.
Um,
And then you vote on the yay or nay about, you know, if you agree on the manager and their staff's recommendations as to how to set the rate, based on rate studies and their discussions, et cetera.
yeah. The reason that we lowered the energy charge as opposed to lowering we do have a PCA, and the reason we didn't lower that is because the PCA would have gone negative if we had gone that route for making the pass through on the energy costs. But since the energy costs had gone down, it made sense to do it via the energy pass through rather than the PCA. Our rate consultants recommended against having a negative PCA. I'm not sure I understand fully the rationale behind that, but
Can you
Yeah, and
comment
I'm
on
not
that,
sure.
Deirdre?
Go ahead.
sorry, go ahead, Michael.
Could you comment on that? I think part of us getting into the weeds here on this was related to could we go negative on a PCA?
So you would simply eliminate the PCA. And to the extent that there was an over collection beyond that, it is your decision whether to, and I'm responding to you very simplistically because I don't have any
Right, but
details.
eliminating the PCA wouldn't have solved our issue because it was already
At zero.
At
at
zero.
zero.
Yeah.
So the question
Then
to balance the books is, could we go theoretically with a negative PCA and show people on their bills that they are less than they normally would be without actually going in and adjusting the cost per kilowatt hour that we're paying for our portfolio of power?
It's an interesting question. I
That
it
was
makes me
what I wanted
it
to get
makes me
into.
uncomfortable to say that there's such a thing as a negative rate,
It made our
because
consultants
But it's
uncomfortable
not a
as well.
rate. It's not a
it's
rate.
not a rate. Exactly. It's no longer a charge for electricity.
Yeah.
That statute envisions it would be obviously a positive, something that you would collect. And when there is a surplus, unfortunately, I think you have no choice but to lower your general rates. And with regard to the over collections, the Department of Public Utilities has opined on that. I mean, it was 35, 40 years ago, but with regard to another light plant, it was Reading, they said, hey, we trust the Board of Commissioners to decide what best to do with that. They can retain it, they can refund it. Rates have been lowered. You could, make it available to give back to the ratepayers, or you could decide you want to give it to the town. I think the idea is that you would not continue to keep charging something when you knew, you were in an over collection position. But
Right.
there
I
is
think our
no
desire was not to charge our customers more than the energy cost and to find the right
right,
way to represent that on the bill.
right, right.
Um,
You could
so,
also
The
put a
the
notice
reason
to.
why they recommended against that, if my memory serves me correctly, is just because the the folks at UFS thought that that creates a negative PCA, creates confusion on the bill to interpret it, and therefore confusion amongst the ratepayers. They would expect, higher call volumes to try and explain that.
hmm. So it was more of an operations convenience issue to them, you think? Yeah. Well, that does make sense. Let me ask Deidre, then also the other question about when we get to the end of our next rate study, um, what what is it exactly that we should be voting on? My recollection is at the end of the last study, we voted on percentage increases to the existing rates. And this discussion about rates really being a formula rather than a number has caused me to think that that's not the right approach. I don't know. Do you have any thoughts on that?
So I think that you can call it a percentage, but you should be allowed to drill down and see exactly. To me, the most important is um, the residential bills being understandable and clear to them. So I don't know how you can vote on something if you can't see what the proposed tariff sheets are and what the actual numbers are. Whether that results in a 2% increase or 10%, I don't know. I don't know if that's particularly helpful for you. As a board member,
It's really
for
just
me, it
what,
would not be. I would want to see what's driving the expenses. You have a budget, you
we
have a
did.
depreciation, et
We
cetera, et
did.
cetera. Yeah,
We
got
saw
it.
that
Yeah.
in
Uh-huh.
tremendous detail, and that was very
Yeah.
helpful. My
Yeah.
question is, what should the vote say? When we
Oh,
come
it
to
just
vote,
whatever the rate is, whatever the rate is. So
numbers.
you can vote on the numbers, or you can reference what will be deemed MDPU number, whatever tariff sheet for R1, for C1, whatever the rates are. There is no law on that. How
Okay.
you want to memorialize what you're voting on, how you want to frame your vote should be the way that makes the most sense for your local customs and how you do your work there.
Okay. I think I understand that now. I think where we got into the issue of the rates being a formula is we were actually talking about the PCA, which we just learned today is not a rate. So,
Right. At least not legally considered a rate. And I realize that that's confusing, but I understand their reasoning. I mean, for me, if I were on the other side of that case arguing this in like 1972 or whatever it was, one of the things I would bring up is, aren't all rates really a formula though, when it comes to a municipal light plant? Because the statute says that your rate shall be based on the cost of production. right? And then they go on to tell you what goes into that, like paying off existing debt and your depreciation expense and a rate of return. And then the actual cost of getting, producing, transmitting, and distributing the electricity. And that, of course, encompasses a huge amount of stuff. It's the stuff that goes in your budget every year. So to me, it's like, okay, well, the state law already told us what can go on our rates. There's no room, for instance, for Laura's new Rolls Royce to go into rate base, so, that's to me a formula already. But I think that they're saying there's really no leeway. I think over the years, in the past 50 years since that case came out, different light planners are using these pass-through PCA type charges for a lot more than a couple of FERC account numbers relative to generation expense or transmission charges. That's just my opinion. We see some, general revenue shortfalls. And I don't know what magic the accountants do to straighten that out later. And I wouldn't purport that's definitely getting outside of my pay grade. So I don't want to, but that's to me, the main difference is, one is supposed to be not have, it comes from a couple of accounts and is a simple formula that by law, you don't need to go through the notice provisions. You do not need to file it at the DPU. When you change the other rates, those are considered quote rate changes, and they have to go through the statutory process, the publication in a newspaper, vote, and then filing within 60 days to the Department of Public Utilities.
Okay. I think that clarifies things for me. Brian, Tyler, and Mike, any other questions or comments? Nope. I see a question, Tom.
I do. Just, part of the issue is, with the over collection is, we don't know what the RECs are going to sell for every year. We didn't know we were going to get a $380,000 check from the federal government for the solar we put in. So those things we have to recognize as revenue at some point. And so there has to be a mechanism to, lower our, and we're bound by the 8%. We can't make more than 8%. So,
but that's not that wasn't set, Tom. That's revenue that was unexpected that comes in. So
yeah,
I don't understand. That should just go into it's unappropriated surplus. That's the way your accountants, when your CPAs come in and do your audit, that's the way they reflect those. This happens all the time. You're definitely not the only system that gets, I don't know what you call them, windfalls or unexpected sources of revenue.
Yeah.
You don't have to adjust your rates. It can stay in unappropriated cash. And then at the end of the year, the board can vote on what it wants to do with that,
But it's not part, it is part of our income though. So we have
It is, but it's not, you're not setting a rate. You're limited to set your rates at an 8% rate of return. You're not in violation of the law suddenly because you got a settlement or a tax credit or something you didn't expect. You're going to have to deal with that on a backward looking basis. But when it comes in, the immediate response is not, oh my God, we have to change the rate, or we have to do this or that because we're over the 8%. The statute is pretty clear on what they mean by the rate of the return. And it's, you weren't setting your rates to collect unexpected windfalls. They have nothing to do with each other. Two different lanes.
Okay. So what we're hearing is that what's required in the law is to set our rates to bring in no more than 8% of the value of our physical plant, and that other sources of income do not impact that calculation. Is that what I hear?
That is correct, because you haven't decided how you're going to spend it yet. It's surplus cash. It's sitting there.
Well, the RECs go into a fund which has a purpose. And so that's the reason we're recognizing that as revenue, because we've decided what we're going to spend them on. I think.
Ahead of time, correct.
Yeah.
But if you get an unexpected, like one of my clients received an unexpected loss settlement due to a product issue. And so that wasn't like a wreck sale. That's something nobody expected to get. And so they have an extra, say it's $250,000, and that's just going to sit there, frankly, until your year end and your accountants report your cash position, and you close the books and it's sitting there. You could decide before then if you wanted to. If you knew this money came in, and you could take a vote and say it's your discretion. We want to spend it on X, Y, and Z.
But then it becomes income, though.
Then it becomes income. But you have to decide. You could also just you could put it in, I guess, depreciation, but you have to make sure that doesn't throw your depreciation rate out of whack. But, this is, now you're getting into accounting treatment. And there is a legal implication to that, but I don't want to step on anybody's, you know what I mean? I'm talking
Yeah. Well,
off the top of my head.
Before we go any further, I want to ask Joan if you have any thoughts on what we've been discussing.
Just one, and that's Deirdre, I've always been told by the regulators that whenever you go over the 8%, you have to make them aware of why you went over the 8%. And if it's an extenuating situation, yes, they're going to say, okay, but they're also going to look at your next year's depreciation rate. And if
who's looking at that, Joan? Because they don't have any authority to regulate your rates. Period.
This is what I'm told from the DPU.
Can you give me a name? Because I'd love to talk to them.
Yeah, Marino is his name. But okay. Somebody just retired.
I mean, we do have a limit on what we can put in our depreciation fund as well, as you pointed out, Deirdre.
That's right. So I don't 100% agree with what you just said.
Okay.
I mean, as far as the revenue recognition rules. But
that's an accounting issue. What is recognized as revenue?
Okay.
The Department of Public Utilities has absolutely zero authority to dictate when you are to report to them on anything. You have an annual report. If that rate of return is 50%, there's not a damn thing they can do about it. The statute says it has to be petition of customers, okay? And if something weird is happening and they disagree, that's what happens. It's local control. Only the board has the power to set rates, not the Department of Public Utilities. You are not Eversource or Engrid, and there are a lot of people in the Department of Public Utilities who may not know that. This is not a legal opinion that you're getting. It's somebody on the phone telling you this. And I wouldn't, I do not believe that is a reliable source. And I know I've said this before. They are not reliable, because the fact that they're even saying that to you indicates that they do not understand their role with regard to light plants. They aren't policing your rate of return. The only thing and they don't even, it's if you need permission from them to vary from the 3% depreciation rate, right? That's the only time they get involved. It says unless otherwise approved by the department. So if you want to collect 4%, 5%, 6%, 8%, for whatever reason, you send them a letter and they rubber stamp it. That's
we have been collecting 5% for the last couple of years. So we do
exactly. Yeah, but that's it. They have no other role under the statutes.
So you're telling me that if I go over my 8% and I want to increase my depreciation next year to 5%, they're just going to rubber stamp it. I've been told differently.
And so, I don't know what to tell you. Have you ever received a negative decision from the department on your depreciation rate?
No, I've never exceeded my 8%.
Wait, two different issues. One's depreciation and one is return on plan.
Correct. But they're telling me if I go over my 8%, so I have some revenue come in that, I wasn't aware of. All of a sudden, I have a couple extra $1 million. I go over my 8%. The next year, when I go for my depreciation increase, they're not going to give it to me. They're going to say, listen, you got too much money last year. We're not going to let you go and increase your depreciation the next year. That's why, because they used to do they used to do it 2 years at a time. They used to approve depreciation, changes 2 years at a time, and they no longer do that. And I was told the reason they no longer do that is because they want to see what our rate of return was from the previous year. And if it exceeds 8%, they're going to take that out of our depreciation allowance increase.
Fascinating.
It is
Well,
fascinating.
so, okay, we have theory and practice here, and they're somewhat in disagreement. Any other questions, Michael
I
or
guess
Tyler?
can I just clarify my understanding? So if the cost of fuel goes up and we need more money to pay for that during a cold spell in winter, we would add the PCA, increase the PCA to cover that. Conversely, if our fuel costs are lower, we should reduce the PCA to zero, not go negative, and adjust the rate of energy in our formula. Am I understanding that correctly?
I like that. Yes.
One difference there, and I'd like to clarify something. We used to have just a PCA, okay? So the PCA included fuel and all other adjustments. Everything we had to adjust, we just used a PCA. When we unbundled our rates a while back, we took out the fuel portion. So now it's really the fuel plus the PCA. So they're both variable components of our bill. So now our customers can see what we're charging for fuel. So we want to keep that as close, as accurately as we can. Okay, then we have the PCA on the side. We can use the PCA to adjust things, but our fuel rate, if we know what it is and we unbundled it just so we could show our customers what we're charging them for fuel, why are we going to adjust things that don't need to be adjusted?
It's really not the fuel, it's the energy.
It's energy. Thank you.
Yeah,
I'm sorry,
right.
energy and fuel. I use those
It-
interchangeable.
Yeah, we used to have indexed contracts. That's like a relic from the Pleistocene era. Nobody does that anymore. Like they you had fuel indexed contracts that were tied to the price of gas or whatever. And now that's power is a commodity. So really, the only time I would think you would be getting fluctuations is for those collared sort of contracts that have an area that they're allowed to fluctuate in under your PPAs. And they might go up because of whatever reason, because the market has a change and due to weather or whatever. But it's not like that simplistic just fuel. Nobody's charging for that anymore.
Fuels, I use energy and fuel interchangeably.
Yeah. Okay.
Okay, any other questions, board or staff? Comments? Okay, Joe?
Yes, thank you. So I just as this is a great conversation, just looking.
Could you identify yourself?
I'm sorry, Joe Fisher. I reside at 3 Huckleberry Hill Lane. Um, I just see the town of Concord has their PCA going positive or negative, and they put it right on their website that it can go negative. So I'm not aware of any prohibition of it going negative. And the other discussion in terms of money coming in, it sounds like more of an accounting question about whether or not it stays on your balance sheet or it moves over to your profit and loss statement. And I don't think it doesn't sound like it's anything more than that.
Okay, thanks very much. If there's nothing else on this topic, I think I'm going to be going back and listening to it again. Make sure I took good notes to make
Thanks,
sure I get.
Deirdre.
Yes, thank you very much, Deirdre. That was really helpful.
I hope it was. Thank you.
Yeah.
You.
All right. Take care.
Thank you, Deirdre.
Yep. Talk to you soon. Bye.
Okay, next item on the agenda is to vote to approve the warrant article for the transmission project to submit to the town. And we have it in our documents. Did you have a chance to look at it?
I did.
Mike, have you seen it?
I did not.
Okay. It's fairly brief. Have you got it in your documents, or should we could maybe you
I
can
can
share it?
share.
Yeah, why don't you share it?
Uh, Can you see that?
Mm-hmm.
Okay.
Okay. And this is pretty standard way that the town puts borrowings on the warrant. I will mention that the uh, can you hear me?
Yes, sorry for the technical difficulty. We had to pause communications for a moment.
Oh, okay. Okay, thanks. So so I'm not sure where I left off, but these are both the article and the recommendation are written by bond counsel. So if we thought we wanted to suggest a change, we really would have to run it by bond counsel because you want to make sure that you've got legal, um, the proper legal framing for borrowings at town meetings so that you don't end up with something that, is non-operative. So I'll just ask the board, do you have thoughts or comments before we take a vote on this? Tyler and Mike are currently muted.
I think this looks good.
Yeah, it looks fine.
Okay. Are there any comments from the staff about this or the public? I don't see any hands up, so then I'll entertain a motion to approve this version of the article for submission to the 2026 town meeting warrant.
So moved.
Second.
Okay, all in favor. Tyler?
Aye.
Mike?
Aye.
Laura? Aye. Thanks very much. Thank you. And the next item on the agenda is the 2026 budgets. So we've received the budgets, and I'm hoping that you can kind of walk us through, Tom, what you think is important for us to have a look at.
Let me share that. I'll share the capital budget since that's be the quickest. I have it. Brianna, do you have the capital budget up?
I do. I can share it.
Okay.
No, I'm sorry. I don't have the capital budget. I have the financials.
All right, we'll do the financials. Can you share those?
Yep.
That's actually not the budget. Okay, you're sharing the financials. Now, let me get the budget. If you can stop sharing, I'll share the budget and then I'll go look for the I didn't share that right today. No, hold on a second. All right, I'm assuming you can see that.
Yes.
Yep. That's the whole budget.
This is the whole budget.
Yeah.
So basically what we do is what we've done this year is we took our revenues from 25 and brought them in into 26 as we don't expect to have a rate increase in 26 right now at this point. So we kept our revenues the same other than the PCA. The PCA, we kept the 25 PCA revenue, and then we added to the PCA, and I'll let Joan explain exactly what we did with the PCA and the energy charge for 26.
Okay. What I did this year is I determined what our revenue was last year and what our PCA was for the year. I took the average PCA and energy combined divided by kilowatt hours to see what it's going to be for this current year. I did have to increase our power cost adjustment and our energy, and I changed our energy charge. What I want to do is I want our energy charge to be the average energy charge for the year, which we have as of the end of November, going into January. So in January, our energy charge is going to be a little over 4 cents. That means our power cost adjustment is going to be a little over 4 cents as well. Because we're trying to recognize a little bit more revenue each month so that we don't have to go up and down with our PCA.
And if I go to actual revenues, that budgeted revenues rather, you can see this line here, our power cost adjustments. So we did the line that I'm pointing to here is the 25. And then what Joan did was adjust them for so that 26. So these two added together will be the PCA for 26. And that just carries over to the total budget tab right here.
Joan, did I hear you right? The PCA and the energy charge are the same at 4 cents?
Just about. So the energy charge is going to be 0.04868 and the PCA is going to be 0.04614. So it's pretty close.
Does that make sense?
To me it does, but what's your question?
Well, the power cost adjustment is to help bring in money when it's needed or adjust. And the fact that the energy and the power cost adjustment are both significant at around 4 cents, shouldn't the energy charge be much more and the PCA much less? It seems like a too large a fudge factor, so to speak.
No, I don't think it's a fudge factor at all. I mean, what you're putting our energy charge or what it actually is. I'm using our average energy cost as of the end of November, which are my most recent numbers.
Okay. So that's real.
That's real. That's real. But guess what? We're trying to target 8% net income for the year, right?
Right. Okay. And I guess this is so low because of the very minimal charge for the large part of our nuclear component in the portfolio, which I believe in a previous set of minutes was 0.005 dollars.
I don't know what that is, but I do recall that I don't know the exact number, but that's what's doing it.
Yeah, it's less than a penny, less than a cent that we're paying. It's around $5 per megawatt hour, which is absolutely amazing that we have so much nuclear in our portfolio and that is the charge that we're having to pay. And that's what's really bringing the cost of our energy really, really down and showing that our rates are very, very competitive.
Correct.
So my question is, why is the PCA so high? That seems a large amount. If you figure we're paying about 18 cents per kilowatt hour, 4 cents out of 18 is a large percentage for a power cost adjustment.
So,
okay.
I mean, if I could just opine for a minute, and then you can tell me if I'm right or wrong, Joan.
Okay.
We last set rates a year ago in January. That was our most recent rate setting experience. And based on what Deirdre says, we are supposed to be setting our rates so that we don't exceed 8% of our in retained earnings of our capital plant. But if we set our rates a year ago and matters have changed such that in order to hit 8%, we need to bring in more money, we would use the PCA to do that because we do need all the way up to 8% in order to be able to cover our budget and pay for our capital expenses. So if we don't hit the mark with our last rate setting, we can use PCA to hit the mark. Does that make sense, Joan, what I just said?
Yep. I think we're all saying the same thing, but in a different way. Think of it this way. We need to, if our power cost adjustment is more than 1 cent, something's wrong in our rates. That means either our customer charge is incorrect or our energy capacity and distribution rate is incorrect. I can't change those.
Yeah.
We have to have a rate study to change those. So my guess is when we have a rate study, one of those two components is going to be increased and the power
Mhm.
cost adjustment will come down, but the energy still we're going to reflect it as actual.
Okay, that makes sense.
Yeah. And I think that our previous consultants expected that our customer charge would probably continue to rise in future years. That may be where it ends up.
Which
And we'll
it
see.
did. It went up gradually over the past 3 years. They did a 3-year projection for us. But, things change, numbers change, forecasts change.
Yep.
So it's time. It's time to have another
Okay.
rate study, which I believe is on the topic
Yes, that's
for today.
Yep, that's next on the agenda. But is there anything else you'd like to highlight for us on the general budget, Tom, before we
Just
go to the capital budget?
yeah, when you look at the capacity, transmission, and energy charges, that budget comes from E&E, and it's listed under the tab. It says, where is it? Back.
Yeah, go back a little more, the other way, other arrow.
Yeah, I'm trying to have something there. Oh, never mind. No, it's not letting me go back.
You just grabbed your pencil.
I know. I don't know how to get it was on top of the back arrow, and now I don't know how to get rid of it. Okay,
Technical
hold on.
difficulties.
So it's right on top of my back arrow. Can't go backwards. But there's a sheet in here for uh, the capital budget.
There it
Actually,
is.
not
You got
capital
it.
budget. No, that's not it. That's an old one. I'm sorry. That shouldn't be in there. There's a I have something right on top of where the back arrow is that I can't click. Oh, maybe this will click left.
Do you want me to call the IT department, Tom?
Yeah.
Can you click on the three dots next to the arrow? Does that?
Yeah. Well, that moves it. It brings me back to the beginning, I think.
And now you can use the right arrow.
I don't, I have to remember where that sheet is. It's back further. Power supply. There it is. So I get these numbers from E&E. They provide these for our energy capacity and transmission for the year. So that tab on the total budget, under these four, that's where that comes from. If you go back looking for it under
Mhm.
power supply. The other numbers, we did a 3% increase on our expenses for 26. And that brings us to the net operating income. And then if you come all the way down, this is where we're right now, given this budget, where we expect to be at the end of the year for estimated return.
So even that high PCA doesn't bring us to estimating a return of 8%.
Yeah.
Yeah. Okay. Okay. Anything else you would like to call out on the big budget?
No, if when you go through this, obviously I have some editing to do because it says 25 operating budget there, but
Mhm.
I will update this and send it out again when I have it.
Okay.
But if you go through it and there's any questions, feel free to reach out to myself or Joan.
Okay. Any other questions or comments from the board or staff? Any from the public? Okay. Thank you very much. Appreciate that.
Thanks,
And,
guys.
that gives me a picture that I can go in and dig in a little bit more. Thank you. So the next item on the agenda is start discussion of vendors for our rate study. And you sent some links to the vendors. And I'll remind us that Tom makes the final decision on what the vendor is, but it makes a lot of sense for us to have a discussion about what we're looking for as a board to help us set rates, what we expect to get from them. I don't know if you have anything to share on that, general topic, Tom.
Just to frame this, I went out to all the municipal light plants and asked them who they used for rate studies. Some of the smaller ones use MWIC that are MWIC customers to do it. There were a couple that used Vinnie Cameron, who works for E&E, to do the rate study. We used Vinnie at one point. And then there was another one, PLM, has done some rate studies for a couple of light plants, but the person that's doing it for PLM is retiring, so we kind of decided we would maybe stay away from PLM in this round. But so the ones I listed were firms that MLPs have used and were happy with over the years.
And did you find there was anything to recommend any one of them to you?
Nothing to recommend. I will say that probably the majority of them use utility financial services, have used, and seem to be happy with them. But the other ones were, available, and people have used them in the past and were satisfied with the work.
Well, I'll just mention, what my concerns are, which well, Tom, because I've
Yep.
been over it with you. But we used utility financial services last time, and I was pleased with their work mostly. I didn't have a reason to doubt that they were very competent at what they did. There was one area where I think that I would, question or probe more this time than I did last time. But my main concern was their method of presenting their results, which was that they would present their results by coming on our general meeting and presenting a PowerPoint presentation. And I found it very difficult to respond in real time to the what's pretty fairly, detailed and complicated information being presented in real time at a general meeting. And I would much prefer to have a written report where they lay out what they looked at, what it recommended to them, and then what they recommend to us based on that. And I've asked Tom to look for a vendor that can do that. And I just wondered, Mike and Tyler, if you have reaction to that, if there are any other interests that you have in terms of what you would like this rate study to look like that we should pass along to Tom.
Yeah, I have two things that I'm aware of that are relatively new to the rate setting process that are coming into the market. And one is the weight, or the word I'm looking for, the impact of the customer charge and how it's equalized out over different ratepayer classes. I've read some interesting articles on that I'd like to see built in and discussed in the rate plan. And also the investor-owned utilities are looking at balancing the rate over the heating costs for kilowatt hours for people that have switched to electric heat. And I think that's something that our rate study needs to encompass as well. So those are things that I would expect to see dealt with in our upcoming rate study that really weren't maybe as in depth in the presentation in the last one.
So you would be looking, okay.
Go ahead.
Just to clarify, so you're looking for them to propose a heat pump rate. Is that fair, or?
I think that's fair, yes.
Okay. Yep.
And
Mike,
an
I think that
explanation.
you might be referring to the IOU's billing, which allows customers to choose a balanced rate as opposed to the variable rate. Is that what you're choosing?
I think the way I understand it is if you can prove to the utility that you're heating extensively for um, heat and hot water using an electric source between those winter months, periods of, I don't know, September through March or April, then you can have a lower rate that affects the cost of the energy, so that you're not paying a disproportional amount on the transmission capacity, etc. I think that's my understanding.
Okay. That sounds different than what I was thinking. That sounds good.
And on your other question about the customer charge, is it about,
Yeah,
could you clarify that a little bit? I didn't really
sure.
understand.
I've read some articles that um, basically take the stance that if the customer charge goes up, it disproportionately puts the burden on people who are using less amount of power per se. So I think we've got to be careful that we don't just keep putting the customer charge up to generate more revenue, and that we really delve into how it affects the different rate groups within the town.
I
And
think they did talk about that during the rate study, is that it does impact people that use less electricity because obviously your kilowatt per hour rate is higher with the less,
right,
using
because
less.
it's a fixed charge for the customer charge per
But
account.
yeah, but if you just take all those charges and add them together and then divide it by the kilowatt hours, right? If you use less kilowatt hours, obviously it's your rate, your and it's not your rate, but what you're paying per kilowatt hours is more with less you use.
Right. Yeah. If you look at it from that
Yeah.
standpoint.
So to me,
So
it's sort of, I'm sorry.
I think we just got to be careful of increasing our customer charge.
Well, what I will be looking at, mostly relative to the customer charge, is what's included. What are we actually covering? What costs does it actually cover? And making sure that that's really explicit as opposed to using it as a way to collect more revenue, which is not appropriate.
Right.
I
I
will want to know exactly what the customer charge is covering. And I know the reason that our customer charge went up slowly over the last 3 years is because the feedback from them was that we needed to cover more of our fixed costs with the customer charge than we were.
Yeah, I thought my understanding of the customer charge is that it's supposed to cover the cost of the system.
right.
So,
Well, by the system, you mean, I mean, because distribution charge is supposed to cover the cost of the distribution system, right? But they said that part of it goes into the customer charge.
yeah, yeah.
So, Joan, help us.
Okay, so the customer charge in theory should cover for all of our fixed costs. So if everyone unplugged from our system and just bought 1 kilowatt hour, we still have fixed costs. But if we did that, the customer charge would be so high that all these people that, have low bills, which is a good, percentage of the people in Hingham, would be paying too much. The bills would be too high. So we had this discussion, if I remember correctly, as to who do we want to be paying the bigger portion, the people that are using electricity or the people that, that aren't using as much as the other customers. So in theory, the customer charge should cover 100% of our fixed costs. In case, how about if everyone goes solar? Everyone goes solar all of a sudden. They're all producing their electricity. We still have fixed costs. So that's my understanding of the theory behind it.
You're right, Joan. I do remember that. Yep.
So one of the things that we can consider going forward, we did not have the income adjusted rate when we went into the last rate study. And there are some systems that give a break to lower income customers on the customer charge, as well as some of the portions that we give the break on. And I think we saw one system, Brianna's going to reinform us about this, but we saw one system that just eliminates the customer charge period for people who qualify for the income adjusted rate. So that's a thing we can think about when we go into this rate study, that making sure that I mean, and there is no, once again, with the income adjusted rate, it's just how much do we feel we can afford to help those who are being um, are having a hard time making their utility bills fit within their income. So we can think about that, with perhaps changing the income adjusted rate if the customer charge continues to go up based on our rate study. Um, Anything else we want to suggest to Tom when he's looking at these vendors?
I have another suggestion.
Mhm.
I mean, time is of the essence here, so we need the rate study done sooner than later. So if we're going to go through a whole RFP process, it's going to take 6 months to do that. I would like to expedite it as much as we can.
Tom, are we required to issue an RFP for this? I thought we could simply decide who to hire and
We can simply decide to who to
yeah.
hire. But I think what Joan's saying, are we gonna go to each of these vendors and ask them for pricing and whether, what they offer? That may take some time.
So I was interested that many systems used utility financial services as we did last time. I wonder if I guess their mode of presentation is the same for everyone. Are they willing to do something different? Because I was
Well,
largely
yeah,
satisfied with their
we can have
work.
that discussion with them
Yeah.
prior to making any decision and see what if they can provide uh, what we're looking for.
Mhm. Anything else we want to say? Okay. Anybody from the public have a comment or question on our choice of rate study vendors? Nope, seeing none. I think we're ready to move on to the next item on the agenda.
So just we're going to do the rate study. Do we have a timeline for that? I think it's important to set some goals in terms of a timeline for it to be completed.
Well, we need to get a hold of, we need to reach out to utility financial services and see if they can provide what we're looking for. If they can, we can engage them. If they're unwilling to provide the services that we're looking for, we'd have to go to some of the other vendors and see what they can provide.
So when would we like it completed?
The rate study itself,
Yeah, or when do we need to have it done by?
Well, I
Joan,
just, I just going to do the sooner the better. I mean, because our PCA is going to stay at
Right, yeah.
until we have a rate study. So I guess we're going to try to push it as soon as we can.
So
So
I have a question. Why
Yeah.
is our PCA going to stay what it is until the rate study? Since it's not a rate. And
well, we're
okay,
hoping not to have to change it, right?
okay, we're hoping that makes
Not to
sense to
have to
me.
change
That
it to, I mean, we'll be looking at the budget every month to see where
yeah.
we are, and hopefully we don't have to adjust it.
Okay. So you're hoping not to adjust PCA, so it would be
but
easier to have the rate study soon.
but
Yeah.
am I hearing it right? Am I hearing it right that we expect the PCA to come down after the rate study?
I think that the PCA should be around a penny.
Right. So it's three
Yeah,
pennies more right now,
correct. So that means,
and
I'm sorry.
and we're in peak winter season.
Yeah, so the other components, after a rate study, the other components are going to go up, right? So it'll allow the PCA to come down at that point.
But you said that you were not planning on recommending a rate increase in 2026.
Well, again, because we don't have a rate study.
But you think we might, if we did have it's possible. We don't know what the
Right.
results will be. So
I'm just thinking last year, the last rate study took us a year and a half to complete.
Right.
If we start this rate study sometime in, you know, again, if we were to have it done by July, would we do an increase in July and then one in January of or do we, do one in July, do one in the following July? I know last time we did it in July, and then we did another increase in January, and then a year later we did a third increase.
I guess the answer to your question, Mike, is ASAP, right? I mean,
Well, that's
as soon as we can cause
that's
it to
my
happen.
that's my feeling. I think if
Yep.
we commit to doing a rate study every so often, then it should be a process that we do that procedure, and then
Okay.
we make whatever adjustments need to be made. And I certainly see personally some inconsistencies in the way we're doing our rates. So I think we do need to set some timelines and come up with a vendor that can give us the data, and then we can make the necessary adjustments.
Okay. Well, we can work
Okay.
as quickly as possible to get the a vendor on you know, on board, and then we can
And hold them to some deadlines, because I felt that, maybe rightly so, but things took too long last time.
okay. We
Okay.
can we can engage them and tell them we need the rate study done by a given date.
Yeah, I think that's good.
Okay.
Thanks, Tom.
Yep.
Okay. Okay, moving on to the next item on the agenda is the research on the income adjusted rate that Brianna was putting together for us. We're looking at making a change possibly making a change in the income adjusted rate, and we were looking for some data to help us make that decision.
Yes, so I will share my screen. So we looked at this spreadsheet on the last meeting that just went through what the other MLPs were doing. I did get more information about what Concord was doing. So they had a discount of about 63% up to the first 657 kilowatt hours. So that is the median residential customer usage per month. However, in talking with Concord, they mentioned they're potentially getting rid of that limit because they're moving to time of day rates, essentially time of use rates, and that they'll be applying most likely a flat discount to those customers, which might approximate 50%. That's still in discussions with their board, but they wanted to kind of let us know.
A flat discount in dollar terms?
In percentage terms,
Percentage
so more
terms, okay.
towards the component discount that we do.
Uh-huh. Okay.
And then, so
and I see that there's Belmont completely waives their customer charge, which is actually higher than our customer charge, I think, at this point.
yes, a number of the MLPs that offer the discount seem to waive the customer charge. Only North Attleboro offered, and Middleborough exclusively were offering a discount on portions of the bill. And then I did go through and do the comparisons for what it would look like on our rate. This spreadsheet, I'm sorry, it hasn't been shared with you, but we will share it with you. This is, if you look towards the bottom, kind of the costs of what it would be under the different types of structures, whether waiving the customer charge, keeping our current structure, or waiving the customer charge and having a discount on the components. So I'm trying to think of the best way to walk through this. You'll see in these gray bars, this yellow bar is what we currently do. So that's a 15% discount on the customer charge and the capacity, transmission, and distribution charge. And so we, have talked about potentially just keeping that structure and raising it. So this is sort of the financial impact of raising that to 20%, 25%, and 30%. And then we have this orange bar here where it goes into no component discount, just waiving that customer charge. And it shows what that cost would be to HMLP on a monthly scale and on an annual scale. And then sort of what the customer impact is. The reason you're also seeing 4 columns here at the end for customer savings is because we broke out the residential versus the general heating rates. So we just have two customers on this general heating income adjusted rate. But because it is different from the residential rate, we wanted to highlight that. And then we show you these two columns here that I've highlighted are the primary impact for the 218 customers on this rate. And then the blue shows what would
Yeah,
happen.
I'm sorry, 218 customers on which rate?
We have 218 customers on the residential income adjusted rate, the standard income adjusted rate, and we have two customers on the general heating income adjusted rate.
Great, I got it. Thanks.
The differences between the rates are just a little bit enough to need to highlight them differently. And then the four blue rows here at the bottom are just showing what happens if we waive the customer charge and we offer a discount. Obviously, the discount would just be on capacity transmission distribution now because the customer charge would be fully waived.
Mhm.
So I know it's a lot of numbers all at once, but I thought this could help frame the conversation.
Definitely.
So one question, Brianna, that there's no discount on the PCA or the energy charge.
No,
Everything else is discounted. Am I understanding that correctly?
Yes, we don't discount any of the variable components of the bill.
Right.
And the PASNY discount is just like not included in this calculation in any way, right?
Right.
Right. Okay. Mm-hmm.
So that's about whatever percentage is about almost 50, a little less than 50% of what each kilowatt hour is costing. I'm saying, 8 cents from the PCA and the energy is not discounted out of about 18 cents for everything else. So that's a little less than 50%.
Well, thank you for this, Brianna. This is really extremely helpful.
Yeah.
I myself would like to take it away and think about it for a minute. I don't know if anybody has any recommendations already based on this to think about, or if we want to come back to the next meeting with ideas about what to change it or if to change it all.
I think that'd be helpful. Unfortunately for me, something's come up and I have to leave soon.
Okay, well, let's take this away and think about it some more and hopefully have a proposal to
Could we have another meeting this month? I think we're at the end of 1 year, rolling into another year. This has been on the agenda for a while. Personally, I would like to see the board make some recommendations that can be put into effect so that we cover the whole calendar year, which will be the beginning of the next billing cycle. That's not possible. Okay, fair enough, but that's what I would, even if we just have a short 10-minute meeting and roll that into the complete billing cycle for this year, I think we owe that to our low income customers.
I'm
happy to follow up on that via email.
Yeah, that would be fine too, Tyler.
By follow up via email, you mean what?
By seeing if another meeting is possible for everybody or not.
Another meeting. Yeah, sure. Let's do that. I'm happy to do that too. It probably wouldn't be a 10-minute discussion, but I'm definitely willing to follow up. And so you must go right now, Tyler. Do you have time for the approval of the meeting minutes? Do you have any things you wish to change on the minutes?
I do have time. I don't have any changes that I'd propose right now.
Okay, Mike, any changes to propose? I know the October 14th minutes reflect your requested changes from the last meeting.
Yeah, and those were fine.
And November 18th, did you have any changes to recommend?
No.
Okay.
It's good.
So hearing no proposed changes to the minutes, can I entertain a motion to approve the meeting minutes of October 14th, 2025 and November 18th, 2025?
So moved.
Second.
Okay, all in favor, Mike,
Aye.
Tyler,
Aye.
Laura, aye. It is unanimous. So let me just first ask if, before we get to financials, just ask if there are any pressing updates on the transmission line project or other capital projects.
Nothing pressing. We continue to meet on a weekly, almost a weekly basis on the transmission project. We're meeting tomorrow to nail down the updated estimate of the project. So we have that for when we go to the advisory committee. So
Yeah, so I will just point out that any minute now, we're going to receive a summons from the select board. And then after that to the advisory committee to come and represent our article. And so I think it'd be great if people from the board can possibly, I will be there. I will make every effort to be there. But it'd be great to have everybody if you can.
Yeah.
Okay, then back to financials then. If we can get that in before Tyler has to go, then we'll be all done with our agenda.
Yeah, let me share. I'll share the. Oh, did I just bump you out, Brianna?
I threw it up because
Okay,
had
you
it
just share
started.
November? Okay, this is the October. So, bottom line is, October, we were negative $297,000. If you go to November,
Different sheet, I think.
yeah, it's a different sheet. Yep. November, we were negative about $500,000. Joan can speak to, again, we have to bring in the $382,000 that we're getting as a tax credit from the government, and the rec money will be
Yep.
brought in. So although we're negative the last 2 months, we do believe that we're going to hit the 8%, given we have to take in that other money. Joan, did I represent that correctly?
Yeah, you did good, Tom. Yeah, I still have to bring in 3/4 of REX, which is around $1 million, and again, the 380,000 that we did receive already from the IRS, the federal government. One thing I do want to mention though for November is our power costs came in $300,000 higher than anticipated. That's significant.
Okay.
Can we make up for that now? No, we can't. We reached out to E&E and they gave us a reason. It's pretty much the ISO, Tom, am I saying that correctly? It's pretty much the ISO charges that pushed us over.
Yeah, November was colder than normal, so the ISO charges were higher, and we also had charges related to Watson because when they budgeted, typically Watson doesn't run in November, and it ran quite a bit in November.
I think you should expect that to continue for December and January.
Mm-hmm.
Good to know.
Oh,
Thanks.
really? Okay.
Yep.
That's not what the accountant likes to hear. No, that
Yeah.
PCA just said it wasn't changing.
Sorry, Joan.
It might be going up a little bit more,
Yeah.
but that's why we have it.
Yeah. Okay, if there's nothing further on financials, I think that brings us to the end of our agenda. So I would entertain a motion to adjourn.
So moved.
Second.
All in favor, Tyler,
Aye.
Mike,
Aye.
Laura, aye. Thanks very much, everyone.
Thank
Thanks,
you.
Thanks,
Thank you.
everyone.
Next time.
Good night.